In 2017, a 60-year-old Japanese businessman walked into a palace in Riyadh and convinced the Saudi Arabian government to give him $45 billion in 45 minutes. His name is Masayoshi Son, and most people think he pulled off the greatest heist in corporate history, getting free money to gamble on startups. But here is the detail almost nobody talks about. It wasn't free money. The deal was structured as preferred equity. That's fancy banker talk for a loan with a gun to your head. It meant Masayoshi Son had to pay the Saudis a guaranteed 7% annual interest, roughly $3 billion a year, whether the startups made money or not. He didn't just raise a fund, he took out a massive mortgage on the future of technology. And what happened next didn't just break the rules of investing, it broke reality. To understand why he did this, you have to understand who he is. Masayoshi Son is an outsider. Born to Korean immigrants in Japan, he grew up poor and faced discrimination. He didn't rise through the system, he fought his way in. By 23, he had sold his first company for $1 million. In the dot-com bubble of 2000, he was briefly richer than Bill Gates. Then the bubble burst, and he lost 99% of his net worth. $70 billion gone. Most people would retire. Son just borrowed more money. His legendary win came from a $20 million bet on a tiny Chinese e-commerce company called Alibaba. That single trade turned into $60 billion. It is widely considered the greatest venture capital investment in human history. That one win convinced him of two things. He could see the future, and if he had enough money, he could force the future to happen. In 2016, he launched the Vision Fund. He wanted $100 billion. To put that in perspective, the entire U.S. venture capital industry raised roughly $70 billion that year. Son raised more than the entire market combined. His strategy was simple: blitzscaling. He wouldn't just invest in a company, he would drown it in cash. Uber, DoorDash, Slack. If you were a competitor, you had two choices: take Son's money and inflate your valuation, or watch him give that money to your rival, who would then crush you. He wrote $100 million checks like they were lunch tips. He told founders to stop worrying about profit and start worrying about speed. He inflated the entire Silicon Valley ecosystem. Valuations detached from reality. A dog-walking app got $300 million. A pizza robot company burned hundreds of millions essentially to bake pizza in a van. It was a party until the lights turned on. Why did he do this? Was it just greed? No, it's actually crazier than that. Masayoshi Son is obsessed with something called the singularity, the moment artificial intelligence becomes smarter than humans. He has a 300-year plan for SoftBank. He genuinely believes he is building the infrastructure for a new species. He wasn't looking for steady returns. He was throwing darts at a board, terrified that if he missed, he wouldn't own the company that builds God. But when you bet on God with borrowed money, the math has to work now. By 2019, the math stopped working. The poster child for this disaster was WeWork. Son fell in love with Adam Neumann, WeWork's founder, and pumped billions into a real estate company masquerading as a tech firm. At its peak, WeWork was valued at $47 billion. When they tried to go public, investors finally looked at the books. They found billions in losses and governance that looked like a joke. The IPO collapsed. The valuation plummeted to near zero. SoftBank lost billions. The Vision Fund posted a $17.7 billion loss in a single quarter. Critics cheered. They said the SoftBank discount was real. They said Son was a gambler who got lucky once with Alibaba and spent the rest of his life chasing that high. If the story ended there, Masayoshi Son would be a failure, but he isn't, and this is the part the critics missed. While WeWork was burning to the ground, Son was holding a trump card. Years earlier, he had purchased a British chip designer company called ARM Holdings for $32 billion. Everyone said he overpaid. He tried to sell it to NVIDIA, but regulators blocked it. He was stuck with it. Then, the AI boom happened. ARM's architecture powers almost every smartphone on Earth. It is the backbone of the mobile world. As AI demand skyrocketed, so did ARM's value. When SoftBank took ARM public again, it was a massive success. That one asset is the reason SoftBank is still standing. It covered the sins of WeWork. It proved that even a broken clock is right twice if the clock costs $32 billion. So, how does he keep getting away with it? It's not just luck, it's leverage. SoftBank owes billions to Japan's biggest banks, Mizuho, MUFG, and SMBC. He is so deeply indebted to the Japanese financial sector that they cannot let him fail. If SoftBank collapses, it takes a chunk of the Japanese economy with it. He operates in a protected space. He is too big to fail in Tokyo, even if he's a punchline in New York. In the end, Masayoshi Son isn't playing by the rules of Wall Street. He isn't worried about next quarter's earnings. He's obsessed with the next 300 years. He believes the singularity is inevitable, that AI will redefine existence, and he's willing to risk bankrupting the present just to own the future. Is it reckless? Absolutely. The debt is real, and the leverage is terrifying. But look at the scoreboard. He survived the dot-com crash. He survived the WeWork disaster. And now, with ARM Holdings, he holds the keys to the AI revolution. History doesn't remember the accountants who played it safe. It remembers the madmen who bet everything on a vision only they could see. The scary part isn't that Masayoshi Son might be wrong. The scary part is what if he's right. Masayoshi Son didn't just buy the world. He rented it with a credit card that never gets denied. He changed the game. He proved you can force industries to evolve through sheer brute force of capital. He normalized the growth at all costs mindset that gave us the modern tech landscape. Today, SoftBank is volatile, but it's alive. He's still betting on AI. He's still chasing the singularity. The question isn't whether he's a genius or a madman. The question is, when the next bill comes due, will he find another Alibaba to pay for it? Because in the world of Masayoshi Son, you don't have to be right every time. You just have to be right one more time than you are wrong. So I want to ask you, is Masayoshi Son a visionary who sees what we can't? Or is he just a gambler playing with a credit card that never gets denied? Let me know in the comments. I'll be reading the best arguments. And if you want more brutally honest breakdowns of how money actually works without the corporate sugarcoating, hit subscribe. See you in the next one.